Crypto, from $300 million in 30 minutes to crypto ETFs worldwide. Compound Finance demonstrated DeFi's explosive growth in mid-2021 when it distributed $300 million in QMP tokens in less than 30 minutes. At the same time, the acceptance of cryptocurrency exchange-traded funds ETFs was a significant step toward the institutional and general acceptance of digital assets. These benchmarks demonstrate how quickly the cryptocurrency market has changed. We will talk about that event and a few its aspects today. Number 12. Decentralized finance innovation. A turning point in the development of decentralized finance, the $300 million QMP event in mid-2021 demonstrated its disruptive potential to completely rethink established financial systems. DeFi platforms such as Compound Finance use smart contracts and blockchain technology to automate financial transactions, cutting out middlemen and increasing efficiency. Users could earn COMP tokens by contributing liquidity through Compound's liquidity mining program, which decentralized reward distribution and governance rights. This innovation creates new paradigms for value creation and distribution, in addition to democratizing access to financial services globally. DeFi platforms like Compound promote a more inclusive financial ecosystem in which anyone with internet access, regardless of location or financial background, can participate through peer-to-peer lending, borrowing, and yield farming. The $300 million QMP token accumulation in less than 30 minutes demonstrated both the community's eagerness to actively participate in and govern these platforms, as well as the strong demand for decentralized financial products. Number 11. Community engagement and governance. The idea of community-driven governance within DeFi protocols was central to the $300 million QMP event. DeFi platforms enable users to engage in governance through decentralized mechanisms, in contrast to traditional financial systems where decisions are made centrally. Users who possess QMP tokens have the ability to vote on protocol updates, parameter adjustments, and protocol fee distribution. By ensuring that decisions are made transparently and collaboratively by platform stakeholders, this decentralized governance model promotes a sense of accountability and ownership. The occasion demonstrated how decentralized governance can spur creativity and adaptability in financial ecosystems, lining up participant interests with the long-term viability and expansion of DeFi platforms. Community engagement in governance not only enhances platform resilience, but also promotes continuous improvement and adaptation to meet the evolving needs of users and market dynamics. Number 10. Tokenomics and yield farming. The $300 million QMP distribution event clarified the nuances of yield farming and tokenomics in the context of DeFi. The economic theories that control the production, allocation, and use of tokens in blockchain ecosystems are known as tokenomics. COM tokens are a vital part of the incentive and governance framework of Compound Finance. They give users incentives to engage in lending, borrowing, and liquidity provision on the platform. During the CLMP distribution event, the practice of yield farming, in which users maximize token rewards by staking or lending cryptocurrency, was crucial in boosting participation. DeFi protocols encourage liquidity provision and active engagement by providing competitive yields and rewards, which improves platform liquidity and user adoption. By efficiently distributing value among participants and aligning incentives, this mechanism not only draws capital to DeFi platforms, but also supports the growth and sustainability of decentralized financial ecosystems overall. Number 9. Market maturation and institutional adoption. Exchange-traded funds ETFs that are backed by cryptocurrency have emerged and received regulatory approval, indicating that digital assets are entering a mature stage within traditional financial markets. Without the hassles of direct ownership and custody, ETFs offer institutional investors a regulated way to get exposure to cryptocurrency like Ethereum and Bitcoin. The introduction of Bitcoin ETFs in Canada and the ensuing regulatory conversations in the US and Europe represent important turning points in the institutional adoption of digital assets. These developments provide institutional-grade investment products that comply with regulatory frameworks, thereby improving market liquidity, facilitating price discovery, and promoting broader market integration. Crypto ETFs bridge the gap between digital assets and traditional finance, providing diversified exposure and risk management tools that appeal to a broader investor base seeking opportunities in the evolving cryptocurrency market. Number 8. Risk management and portfolio diversification. Crypto ETFs give investors a strategic edge in risk management and portfolio diversification among established and emerging asset classes. ETFs allow investors to spread risk across a variety of assets and optimize portfolio returns in accordance with their risk tolerance and investment goals by tracking indexes or baskets of cryptocurrency. By reducing the volatility and concentration risk connected to individual cryptocurrency, This diversification approach increases the accessibility and allure of digital assets for both institutional and individual investors. With regard to custody, security, and regulatory compliance, crypto ETFs offer a regulated and structured investment vehicle that allays investor fears and promotes steady market expansion. The availability of diversified investment options through crypto ETFs broadens investor participation, stimulates market liquidity, and contributes to the ongoing evolution of digital finance within global financial markets. Number 7. Financial inclusion and access. Financial inclusion is greatly enhanced by the $300 million COMP event and the growth of cryptocurrency exchange-traded funds ETFs, which increase global access to financial services and investment opportunities. By using blockchain technology to remove restrictions like minimum investment requirements, financial intermediaries, and geographic location, DeFi platforms democratize access to financial products and services. Regardless of location or background, users from all over the world can engage in decentralized financial ecosystems, earning rewards and participating in governance. Likewise, crypto exchange-traded funds ETFs offer a regulated avenue for both institutional and individual investors to acquire exposure to digital assets, promoting increased inclusivity and decentralizing access to cutting-edge investment prospects. These advancements enable people and organizations to control risk, diversify their holdings, and take advantage of the revolutionary potential of blockchain technology in the international financial systems. Number 6. Regulatory evolution and compliance. Crypto ETF frameworks and regulatory approvals are examples of how traditional financial markets are continuously evolving and adapting to digital assets. Transparency, market integrity, and investor protection are all improved by crypto ETF adherence to set regulatory standards and compliance requirements. The risks connected with investing in digital assets are reduced by regulatory clarity and oversight, giving institutional investors a safe and legal way to allocate funds to cryptocurrency. Within the cryptocurrency ecosystem, this regulatory framework supports the growth of strong compliance practices, encourages investor confidence, and stimulates market expansion. The acceptance and growth of crypto ETFs as a viable investment vehicle by regulators indicates that digital assets are becoming more legitimate and widely accepted, which will ease their institutional adoption and mainstream integration into the world's financial markets. Number 5. Market dynamics and token valuation. The dynamic and speculative nature of decentralized finance tokens within blockchain ecosystems was brought to light by the $300 million COMP event in mid-2021. The quick accumulation of COMP tokens demonstrated how market sentiment and activity can have a big impact on token valuations. These kinds of events frequently show a high level of investor interest, which is fueled by hopes for yield farming rewards, involvement in governance, and possible price growth. But they also highlight the risks related to DeFi tokens' inherent volatility and liquidity, since valuations can fluctuate dramatically depending on market conditions rather than conventional financial measures. This incident demonstrated the significance of risk management and due diligence when engaging in developing blockchain-based financial markets and provided an invaluable case study for comprehending market behavior within decentralized financial platforms. Number 4. Impact on DeFi ecosystem growth. Within the DeFi ecosystem, innovation and exponential growth were spurred on by the $300 million COMP event. DeFi platforms like Compound Finance gained international attention as a result, which led to a rise in user participation, capital inflows, and the introduction of new initiatives and protocols. This spike in activity hastened the creation of innovative financial products and governance models, while also confirming the viability of decentralized finance. In order to increase the usefulness and scalability of DeFi applications, developers and entrepreneurs took advantage of the momentum to introduce innovations like automated market makers, decentralized exchanges, and cross-chain interoperability solutions. The occasion highlighted how DeFi can upend established financial intermediaries by providing accessible, programmable, and transparent financial services to a worldwide clientele. Number 3. Regulatory scrutiny and compliance challenges. In the DeFi space, the quick accumulation of COMP tokens valued at $300 million brought regulatory attention and compliance issues. Regulators from all over the world are struggling to manage governance tokens, liquidity mining schemes, and decentralized protocols within the confines of current financial regulations. As DeFi platforms become more popular, concerns like investor protection, market manipulation, anti-money laundering, and know your customer regulations are becoming more pressing. The incident made clear how important it is to have legal frameworks that strike a balance between investor protection and innovation, creating a secure and open atmosphere that is essential for the growth of decentralized finance. Regulators seek to support innovation and market integrity while reducing the risks associated with new financial technologies by modifying current frameworks and maintain contact with industry stakeholders. Number 2. Economic and market integration impact. The introduction of cryptocurrency exchange-traded funds (ETFs) into traditional financial markets has reached a major turning point with their global expansion. ETFs offer a regulated and well-known investment vehicle for institutional and retail investors to increase their exposure to cryptocurrency, such as Ethereum and Bitcoin. The integration of digital assets into diversified investment portfolios strengthens their role and improves price discovery mechanisms and market liquidity. Within well-established regulatory frameworks, crypto ETFs allows investors to diversify their asset allocations, protect against traditional market risks, and profit from the potential returns of digital currencies. Crypto ETFs encourage a wider adoption of digital assets and aid in the development of international financial markets by bridging the gap between traditional finance and cutting-edge blockchain technologies. Number 1. Technological advancements in asset management. Crypto ETFs, which use blockchain technology to improve transparency, security, and efficiency in managing digital asset portfolios, mark a significant technological advance in asset management. With the use of blockchain technology, these exchange-traded funds (ETFs) provide investors with enhanced transparency and control over their investments through secure transaction settlement, immutable record-keeping, and real-time asset holdings tracking. Future advancements in tokenized asset offerings, decentralized governance, and automated trading strategies are also made possible by the creation and implementation of blockchain-based exchange-traded funds (ETFs). Crypto ETFs establish a precedent for increasing operational efficiency, cutting costs, and improving accessibility to digital assets for a global investor base by integrating blockchain into traditional financial infrastructure. In conclusion, the $300 million KMP event and the rise of global crypto ETFs exemplify the dynamic evolution and increasing institutionalization of cryptocurrency. If you liked our video, then hit the like button and subscribe to our YouTube channel.